good morning, everybody. Welcome to our question and answer time. We have a wonderful time that we're going to have today. We are so grateful to have Ashley McKenzie Sharp with us. She is a mortgage lender with Fairway Mortgage, and we're glad to have her with us to answer our mortgage type questions. And then we also have Blake Ginther with the Ginther Group of Keller Williams with us today to help us on our realtor side of things. So we are excited to have them with us today to be able to answer some of the questions. Many people sent in a lot of questions when they did their registration, so we're going to kind of go through those. And then if you have questions along the way, feel free to jump in, ask questions. This is going to kind of be an informal kind of session, but we'll have a good time together trying to learn about real estate and mortgage lending and get some good information out there. There's a lot of good questions were submitted. If you guys are ready, y'all ready to get started?
Let's roll.
Do this.
All right. So we had a question. We'll start with this one, Blake. I think this one will probably be better geared towards you. Maybe Ashley will have some answers to this one as well. Heather wanted to know, how do you buy a home without a realtor? I know that's not what you want to. That's not what you want to do, Blake. I'm sure, but
no, but I mean, you can. In certain situations, I have folks who will reach out to me and they're buying their family member's home, right? And they're which is always a scary thing, but that happens. And I will say, look, if you've already agreed to the terms, if you guys are all on the same page, just go straight to a real estate attorney, and they'll charge you a little extra to draw up a contract, use the North Carolina standard documents. And I think that that's something that is done often, and it depends on the market. Honestly, there's usually a winner in that scenario. And in today's market, that's probably the buyer would be winning, honestly, if they could go directly to a seller, because the sellers would probably get more on the open market with the inventory shortage that we have. So to long-windedly answer the question, you could go straight to an attorney. And if you're a seller, I would say you're probably losing money. And people go, yeah, but my house is a mess, or it's my mom's house and she didn't keep up with it. And I'm going, okay, still, I would explore those options with agents before signing anything. And then if you already have agreements in place, then go to an attorney.
Good.
From the lender perspective, it's definitely a more difficult deal. I will say that. If it is not family, there's a lot of questions that real estate agents handle and answer for you that you're going to be referring to me for, and I'm not a licensed real estate agent. So I can just say, look, you might want to get a home inspection or a pest inspection, but outside of that, that's not my wheelhouse. So using a real estate agent is really highly advisable.
You like how I didn't sell my profession at all there. And the truth is, I didn't want to, because the question was how can I do it without? And you can. And to Ashley's point, I will just say this. I've helped families, I'm not in for certain states, who have kind of come to that thing. And I just said, go straight to an attorney. I've helped them find an attorney locally. It's always, there's usually some fireworks. There's very rarely, because that's really what an agent's number one job, right, is to market it and get as much interest as possible, and then also to get it to the finish line. And we do have a lot of conversations, as any spouse of a realtor will tell you. There's a lot of conversations that take place to get it to the finish line.
Good deal. Heather also wanted to know, guys, do you anticipate the housing market getting better for buyers?
No. Yes. Yes, eventually, but not for the foreseeable future. It's just the market is driven by inventory, and the inventory is low, and unless we start artificially enhancing pricing for builders to build in different price points, start incentivizing, if you will, from a tax perspective, from government, which isn't always a popular thing for folks to hear, but unless there's some kind of involvement and it's just free trade like it currently is, I don't see a lot of new construction being built in the lower price points, which is where our inventory is so short. So yeah, I don't, Ashley, do you have an opinion?
I agree. I mean, if anything, rates since the election have snuck up on us just a smidge, maybe a 1/4%. So they're definitely not quite as low, which is not buyer friendly. And I think we all know from the news that lumber prices are up. So the cost to build is super expensive right now. And existing homes in the lower price points are, I mean, flying off the market. You really have to have a good savings, and you really need to be a conventional borrower with really great credit in order to win those deals. I mean, people are going $5, $10, $15, $20,000 over list price. So, you really need to be prepared to buy in this market.
And I'll just add one more thing. I don't think prime is going to change dramatically, right? I'm talking to two different lenders here. I'm talking to banks, so I'm going to be careful what I'm not making like hardcore predictions. I just don't think we can, as an economy, afford to go very far from where we are. So interest rates will wiggle, but they aren't going to climb. I don't think for a very long time. So buyers who are like, we used to say, well, you better hurry up, interest rates are going up. I said that all the time. In fact, I think on our last talk of one of these a year ago, I probably said that because it looked like that's what was happening. And now I'm backing off that and saying I don't anticipate it changing much.
Everything that I read says the rate should stay low. It's just they may climb a little bit. So you hear all these 2.5 and things like that, 2 1/4 or 2. We may see them higher 2s, maybe lower 3s, which is still a fantastic rate.
Still half of where it really should be.
Right.
So I know last year, the three of us guys, we did a video kind of on the same lines, but we did it just kind of here and not interactive. And we were talking about housing. Typically, when you're talking about the lower cost housing, we're talking anything 200,000 and less. Is that still the range that we're looking at as far as where we're having a real shortage of inventory?
No.
That's what's changed. It's
Okay.
all the way up to what we would call luxury in our market, which is 500. I would say anything below, definitely below 4, but probably below 5. We have a major shortage. I mean, it's the first time in a decade that we are below, that we aren't a buyer's market even above luxury, which is like I never thought we would ever see, honestly.
Well, yeah, I mean, I remember us talking last year, and the housing market in that 300, especially 300 up, there was plenty of things. I mean, that's where that kind of switch went to where it was a buyer's market last year. And now that's interesting to see that has changed
COVID
in just a short time, honestly.
Well, COVID made people want to. I mean, people look. First of all, a lot of people had a lot of extra time on their hands this year, for a variety of reasons. So a lot of people looked at their space, looked at their lives, and went, you know what? And I hate to say this out loud, but they went, I'm not loving this. I'm ready for a change, right? This was a lot of people were ready for many changes in many areas, homes being one of them. And the folks that the economy stayed strong for them, and there are a fair amount of folks that actually went like this, and obviously there are not, but those that went up and they moved like never before.
Well, I mean, obviously, I mean, Ashley, you were just talking about the houses. We're going very, obviously we know, and this was even last year when we talked, they're going very quickly. And you're getting, a lot of times they're getting above asking price on the house. So obviously if those smaller, affordable first time home buyers or even second, home buyer type houses are selling, then they're either downsizing or they got to be moving up, which would make sense of why, probably your number one thing, Blake, for you showing a house is I've got to have a dedicated home office. Has probably been huge this past year.
And space for kids to have,
Yeah,
right? Not in their rooms, then they're looking more like before a playroom was like a bonus thing that people were like, I'd like to have a playroom for the kids, but if it creeps over, it's a must for a lot of families. A lot of
yeah,
families are like, gotta have that bonus room or that separate homework room, school.
yeah. All right, so our next question comes from Cindy, and Cindy wanted to know, do you have to pay closing costs again, or is there a way to avoid it? I'm not sure in what context she's speaking about there. Is there a way to benefit from equity in my home by refinancing? So I'm going to assume in refinancing, do you have to pay closing costs again, or is there a way to avoid it? I think Ashley probably can start that one off.
Yeah, I mean, there's a way to avoid it if you take a higher interest rate, but in all reality, the goal of refinancing is to lower the rate. So you are going to pay closing costs. On average, with an appraisal and attorney fees, minus your escrow for your taxes and your homeowner's insurance, closing costs are around $3,000. In a lot of situations right now, we're seeing that the appraisals are actually waived. So that will save you, $500. But most of these situations, we actually roll the closing cost back into the loan, so you don't actually come out of pocket with a lot of cash. The ideal is to get it to zero.
Good deal. Paula wants to know, when selling a home, what is the best thing to do with the money if you don't plan to purchase a new home right away? Will taxes be owed on the money collected from the sale of the property? Now, I know none of us are are tax preparers, so we can't, really speak to 100% certainty unless you do know the answer to that. But what's the answer?
So well, capital gains won't be paid if it's your primary home. If you're a single individual for up to 250, if you're a married couple up to 500. So
Okay.
a lot of room there for capital gains to not be paid if it's your primary. Ashley and I were talking about before this. She said, should we talk about 1031? If it's not your primary home, if it's an investment, then you can absolutely have to designate it beforehand. You earmark it to a closing attorney, to a specific 1031 attorney who handles it with and gets involved with the closing attorney. You close that, the money you make goes into that account and stays with the attorney until you designate a new place to park that money, right? You have to reinvest it, and you have only a certain amount of time to first find it and then close on it. And I believe, and actually this is where I meant to check to Google myself before I say it out loud, but I think you have, it used to be 90 days to locate and then 180 thereafter to close. I think they gave you a little bit more time to locate it now. I think you might have 6 months to locate it and then an additional 6 months to close, I think. And so but if it's your primary, then you really don't need to worry about it, honestly. If it's an investment, then I'm going to recommend you reinvest it. And there's still a lot of great investment opportunities, and there's going to be more. But that's also what's changed in our inventory too.
Good deal. Tina wants to know, what is the beginning process of buying a home?
Well, back to
get a realtor, get a pre-approval on your mortgage. I mean, that would be where I would tell people to start.
Yeah.
Call Ashley, call Blake.
Yeah, well, and we
tell them what you think.
Go ahead, Ashley.
No, I was going to say, tell them what you think.
Well,
always find your agent first.
Look, I think what happens, I know what they do, right? They go online and they look on one of these sites, and the site either recommends them to realtors, or before they know it, now they're getting blown up from realtors. So they can try to avoid us, but that's why we're in the bottom 5 of desirable profession or respected professions, because what happens is you start looking at a house, you get blown up, and now all of a sudden you got all these realtors calling you. So my best advice would be pick one, and then they can shut it down from you getting all of those annoying phone calls from from Zillow and all of these other sites. So I would advise talking with a realtor and interviewing. We talked about this a year ago. So many folks don't interview, and you really should. you really, really, really should interview. You know, most folks interview when they're getting a big remodel. Most folks don't have one person come out, quote it, and go with that person, right? Most folks get several. If a doctor recommends a surgery, you might get a second opinion, right? You might want to know, like, do I really need this? So most professions, you know, you interview. So I would recommend interviewing several agents, and sure, use all those sites if you want to find out, you know, who are some of the top agents in your area. And then those top agents, and part of your interview should be, who are your recommended resources, right? Who are your recommended vendors? And then see from both, you know, 2 or 3 of the people that you interview, if a certain lender comes up. And I would bet a lot of money if people interviewed 3 agents, 3 realtors in Winston-Salem, North Carolina, that Ashley's name would come up from at least 2 of the 3, right? So then they would go, oh, well, this Ashley person came up a couple different times, I should reach out to her, right? And then they should reach out to several. And if you interview, if you do shop around, you'll find Ashley can beat them.
Yeah.
Oh, for sure. And the pre-qualification process is super easy. I think that it really bodes well for you as a client if the agent and the lender are, you know, have a relationship, because we can talk to each other and make sure that we're answering your questions appropriately. We're on the same page. You know, it's a smoother process all the way around if you kind of build a team around you for this process and the journey. I really think that you'll find that it's just, you won't hear those nightmare stories. You won't feel that nightmare story that you heard from your friends. And, you know, I know a lot of people have good friends that are agents, or a family member may recommend, and those people are fine to interview, but I would also include some other people. You don't have to use your best friend for a real estate agent. You could check around and interview some other people. They may have a little more knowledge in the market, and you may be able to win that deal instead of continuing to make offers and losing and losing and losing. So I do think that the interview process is huge.
This inventory, this market is really helpful to top. I think agents who are in it full time are growing their business, and honestly, opposite of that, agents that are not are struggling. And it's going to continue to be that way because it's a really complicated market, and you have to be in it every second of the day to see what's coming, because it's coming and it's going quick. So full-time agents, you know, back in 17, 18, 19, I would say there were a lot of part-time agents, and they actually sold a fair amount of houses, like some of them double-digit houses from family members and friends, part-time, you know, doing it 10 hours a week. I think those days they're going to take a hiatus. It's going to be about a year or 2 before part-time agents are going to be able to succeed in this industry, in my opinion, because of how complicated it is. Mm-hmm. And a local team, I'm just going to throw that out there. Nothing against national lenders, but I'm a big proponent of local lenders. First of all, they can shop, and they might even get the national brand, right, as a part of the buyer, right? That's a very possible thing, but you want a local expert, because they get our market and they get the expectations. Our expectations are not the same as Ohio's expectations or Florida's expectations. So let's not even, you know, let's go local.
Right.
Yeah.
And I usually, you know, because I get, you know, asked a lot of times, you know, when people find out I work for a credit union, everybody wants to know about loans, you know, and so, you know, and I tell the people the same thing about home loans versus, you know, and car loans. To me, it makes sense, and you guys tell me if I'm on the wrong path. To me, it makes sense, get that pre-approval early, because there's nothing worse than, you know, going out here with your realtor or on your own and finding a house that you just fall in love with that is, you know, 325,000, and you will qualify for 180,000, and then you're just kind of heartbroken, and you've got to start that process all over again. Same thing with a car. I tell people, you know, if you know, get a pre-approval, find out how much you can spend, so then you can find a car, you know, that's in your price range. To me, I feel like it's the same way with the house. I want to get a pre-approval, figure out how much can I spend that they're going to allow me to mortgage, and then I can start looking for houses. It narrows down that search, and I don't have to, my eyes, you know, it's like Thanksgiving, you know, I don't put more on the plate than what I can actually eat, you know?
Exactly. And people are so fearful of that credit check. It's going to impact your credit maybe 5 or 10 points, and it's so worth it. You're going to know up front what you qualify for. If you need to do some work on your credit, we do free credit repair. So we can go through all of that, make sure you're ready so that when you go out with an agent, which FYI, agents are not really taking you out to look at homes right now unless you have that pre-approval package in hand, because when you see that house, if it's listed that day, it's going to be gone more than likely in a couple of hours. So you need to be fully prepared and have that pre-approval in your arsenal so that when you see the home, you can make an offer that second. And you know, credit repair, super easy. It's free with us. We can do that. Make sure that you're ready. And again, like John said, you're not going out and looking at that $350,000 house if in reality you really are more comfortable with the $180,000 house.
Right.
It just makes sense to really do the pre-approval. It's valid for 120 days. You've got 4 months to look. It really is the right next step.
I'm also going to throw one thing out there is this time of year, there are people who were a year ago might have gotten pre-approved and then COVID hit and they just went, no, I'm not doing anything right now. Right. And so they got a pre-approval with a 4.25 rate or a 4% rate. And they're not paying attention because there's enough going on in the universe. They're just not paying attention that rates are now in the 2s. And they got a pre-approval with a monthly payment they were comfortable for that was, you know, at a $190,000 house. And now they can afford a $240,000 house for the same monthly. I mean, it's a big difference.
Right.
And that's
two of those yesterday.
It's a real thing. There are a lot of people who got busy, decided they're not going to do it, got pre-approved around a 4 probably, or maybe even slightly over it. And now they're in the 3 to even 2s and going, whoa, I can get a lot more house.
Yeah.
Right.
For the same rate, for the same amount of money.
Good. Yeah. So it just goes to show that pre-approval is so important. Yeah. Good deal. Okay. Danella has sent in a couple of things, wanting to know some things about new construction home, conventional loan, maybe first-time home buyer program, what is out there. I think we just talked about pre-qualification, and then, you know, maybe modular difference between maybe a stick-built modular type home. What are some things? There's a lot of stuff in that.
She threw out a lot there.
She did.
Yeah.
New construction, I think it depends on your price point. I mean, are you looking for custom or are you looking for, you know, more of a track builder, somebody that's kind of custom but not? So on, you know, with the really super custom homes that are probably 4 or 5 and up, those are going to be the types of homes that you're going to need a construction to permanent loan. Which is a whole different bag of wax. I mean, you're going to have probably 10% down, maybe 5. The rates are different. It's a whole different product, and you definitely have to have stronger credit in order to qualify for that product. If you do go with more of the track builder, they typically will finance the construction for you, and then we do the final financing, do just a standard 30-year fixed rate mortgage for you and close on the loan at the time the home is completed. So 2 different products there. And as far as conventional loan, is she asking conventional versus like FHA, or didn't really clarify?
I'm getting a head shake, so I think that's
what. Okay. So
Yeah.
with the FHA mortgage, with FHA, it's a little more of a forgiving product. You need 3.5% down. They allow for lower credit scores down to a 620. You can utilize that in conjunction with down payment assistance. So it's just, you want to look at FHA as a great program to get in if you've had a little bit of trouble in the past with your credit and you don't have a lot of money saved for a down payment. Conventional is actually another great option. I feel like you really need to have a credit score 680, hopefully above 700 for that product. And then you can also, if you're a first-time home buyer, you only need 3% down for a conventional 30-year fixed rate mortgage. So it's still a great product and can still be utilized in conjunction with down payment assistance. So with the down payment assistance program, the one that I adore is North Carolina Housing, and it's run through the state. They offer $8,000 for first-time home buyers. It actually has some stipulations based on county, family size, and there's some income limitations. They do want a minimum credit score of a 640. And their rate today on the $8,000 assistance program is 2.75. So it's still a great rate.
Wow.
That $8,000 is forgiven in 15 years, and there's no payment on it, no interest accrued. So it's a great option to help with your down payment and maybe a portion of your closing costs to help you get in that first home.
Yeah, not to talk politics, but that program will probably get more speed in the coming months. I would anticipate that there will be more programs like that, and with, yes, yeah, because it's available, but it's a trickier loan, and not a lot of people are doing it, and so it's not as utilized currently as I think it will probably be moving forward for the next couple of years, would be my guess. Ashley, you?
Yeah. They're trying to streamline it so that it's an easier program. We do a ton of them, so we're really good at it. So definitely reach out if we can help with down payment assistance. You know, there's a lot of programs that are through the state, through your county and your city. I find a lot of those programs, this is personal opinion, to be quite cumbersome. They take a lot longer, so I'm not a huge fan. But North Carolina housing, we can still close in 30 to 45 days. And it's not, you know, you don't feel like you just got, you know, you went through the ringer to get that product. So it's a fun product. It's nice. They do have programs for borrowers who are not first-time home buyers. So, you know, you can get 3 to 5% in assistance with the program and have owned a home like currently. So they have a lot of fun programs. There's a tax credit that they offer for up to $2,000. It cannot be utilized in conjunction with the $8,000 assistance program, but it's a program that you could use if you were looking at, you know, your own down payment and you just wanted to utilize the advantage of that additional $2,000 a year. So lots of fun programs. Definitely reach out for more information to see if you qualify based on your household size, county that you're looking at, and your income.
And I'll throw in there too that from a modular stick home perspective, modulars are built off-site, right, and transported and put on a typically are put on a brick foundation, on a cinder block foundation, you know. So they're definitely not mobile, right? So people like to put them in the same category as mobile. They're not. There's no wheels. No, and they are wheeled out typically on trucks and several different pieces, and modular homes are so they're built off-site, put onto a foundation. And honestly, Ashley, correct me if I'm wrong, I think there's plenty of lending for modular that's you know, there's certain stipulations that I think you can't get certain loans on modular. Is that correct?
So on a modular home, if it's a true like modular, like off or on frame, not manufactured, modular, then we actually consider those stick built. So you can literally get conventional FHA, VA, USDA on those. Now, if you're talking about manufactured, we do a double wide manufactured home on a permanent brick foundation. And that program, you can actually go through FHA or VA and even conventional now. USDA is the only one that does not offer a program for an actual manufactured home. There is not down payment assistance for manufactured homes unless it is brand new. So if you are buying a brand new manufactured home, putting it on a permanent brick foundation, having that all set up, then you can utilize FHA conventional VA with that down payment assistance program. So they're definitely starting to embrace the manufactured home again. The rates aren't crazy. It's still something that we finance.
Well, back to what we first talked about with inventory, right? And the price points being where they are, and builders unable to build in certain, they're going to be more manufactured. I should have said manufactured versus mobile, because mobile really isn't much of a thing anymore. Most of it is manufactured. And I do think that that's going to be probably get more popular because of price points to build. It's just going to be really hard for builders to build products under 150. I mean, it's going to become more and more challenging.
Good. Well, staying in the whole buying and loans and stuff, I have two different people that have kind of asked this question in two different ways. Can you buy a home with outstanding student loan debt? One is asking that they're in deferment. The other one doesn't specify. It's just what is the deal? What are you looking for actually with student loans?
So it really depends on the product. I mean, ideally, if you have a large amount of student loans, then you really want to go with conventional loan. So really try to get that credit score up. That 700 range is ideal. Then with the conventional product and a student loan, we can use your current payment plan. Now, if you're in deferment, you're going to have to go on some kind of payment plan, be it an income-based repayment plan of 0. If it's 0, we can use that $0 payment to get you qualified. Now, FHA has a whole different standpoint. They want you to use 1% of the outstanding balance or your standard repayment plan, which is a fully amortizing repayment plan. So, ideally, if you have a lot of student loan debt, get that credit score up. Let's go conventional. That way we don't have to worry with your debt to income ratios and the FHA product. I'm hoping that may change, but it's been in place now for a couple of years.
I do think that will change, because I'm not going to go on the high horse that this is, to me, this is the #1 challenge from a housing perspective that will hit that has already hit our housing market and will continue to until we do something about it. But student debt is a real thing, right? It's a real challenge, and for millennials in particular, and for gosh, what's the younger one? Gen Z. They are have outrageous student debt typically, because colleges have gotten so outrageously expensive, and it's the only thing. And again, don't want to go political, but it's the only thing that's not regulated. We're a highly regulated country, and I'm not saying that's good or bad. It's just a fact. And student debt is the one that isn't. And I think that really, and I think that will probably change, and that will probably help slowly offset the challenge that is when people have the debt that they have and they can't find deferment plans, they can't buy, and it just sets them back for getting an education, which is not the intention.
Yeah, it's counterproductive. I feel the same way. I really hope that that's one of the things that they immediately change, because it's been really difficult. As well as, I don't know if this is something that anybody brought up, but this whole COVID shutdown, if you're self-employed, it is extremely difficult in this market to purchase a home, because we do not have any kind of changes in the guidelines, be it conventional or FHA, to account for that 4-month shutdown. So all of a sudden we look at your profit and loss statement for 2020, and all of a sudden you show this 4-month shutdown where you made 0, or maybe you were actually just paying expenses out. Well, now you're showing a loss for the year. And so now all of a sudden you can't get a loan. I feel like something's coming, something has to come, because that is a huge issue. These people cannot buy a home. So be prepared if you're self-employed, get with us quickly, because it's something that needs to be reviewed before you even get in your head that you want to buy a home. The guidelines haven't changed yet, but if we can get, if you have been profitable and things have turned around for you since reopening, then maybe we can go on and restructure and get you in the house now.
Good deal. Good. All right, let's switch gears a little bit, and I'm gonna throw this out to Blake first, and then we'll see what Ashley has to say on the lending end of this. Brenda wants to know the amount of work needed to prepare the home for the market. Don't want to over improve, but want the home to get great offers. Specifically speaking, she has a 4-bedroom, 2.5 baths, about 2,300 square feet, and it gives she says it's a sought after property. I think everything right now is a sought after property. But obviously, we don't want to, a house that looks like the 1980s, but you don't want to go over what the house has the potential to be in the comps of the area either, I would assume.
Yeah, I think there's a difference between remodeling for yourself and remodeling for resale. And I think that's where, I think that's my favorite thing, is that I still almost daily get texts of like, hey, we're looking at redoing this. Would we get value for this? And my first question is, y'all moving anytime soon? Right? And they go, no. And I go, okay, well then, honestly, do this. And if you're there for over a couple of years, you'll recoup that. Because there's several different ways. Are you gutting a bathroom, or are you putting on granite countertops and keeping the cabinets and changing the light fixture, right? Are you putting in all new cabinetry in your kitchen, or are you just going to use the existing cabinetry and put on, lipstick, shall we say, on a new backsplash and granite, paint those cabinets? So I think that this is one of the things that, and back to your first question to should we use a realtor, I think this is the number one reason why people don't have a positive, or maybe not have a positive opinion of realtors, is they don't utilize us in capacity that we can help for the entirety that they're in the home. And that's where, that's a big part of my job. And I love these texts, and I get them almost daily. Hey, I'm looking at doing blank. First of all, I can provide them names and numbers of, you name it, right? What plumber, electrician, contractors, granite places. I should be able to help them start that process as to who to call. And then, look, I wouldn't go crazy. If you're going to sell in 3 years, don't redo the cabinetry, paint the cabinets, put on. Those are the things that an agent should be able to help with. And so to be able to answer a question without seeing it is kind of impossible. I'll say this: painting and light fixtures are the easiest bang for your buck. Light is crucial. Change all your light bulbs, maybe change your light fixtures, paint your wood on the outside, because of days like the last couple of days, they're probably rotting because wood in our climate is terrible. So paint that wood on the outside, paint the threshold in your front door, first impression. Most people have a little good old rotted wood front door threshold, because again, why would you ever have wood on the exterior of your home in North Carolina? I don't know, but they do. So that paint and lighting, those are, Ashley, I've got a few opinions, but I do think that
all rotting, folks.
if you got wood on the exterior of your home, it's rotting.
Probably.
Look at as it's pouring in like pitch black outside at 11:45. So
so basically, you want to make sure that things, your first impressions. You want to make sure that things look clean. And let's even go into a little further than this. If you've got a home and you've painted and stuff, declutter that home so that they can see the potential within it. I know open concept is a huge thing, and if you don't already have an open concept, the last thing you want to do is have your living room full of your kids' toys and big bulky furniture and stuff that just really makes, big heavy drapes over the windows, making sure that it's light, it's airy, it's clean, it's fresh, there's space, because you want people to be able to envision themselves living in this space and not your stuff in.
Well, John, well said. Literally, I would say that we live in our homes 110%, right? The average person lives 110%. They jam a little more than was intended for that home into that home. And the right way to show it would be 50 to 60%, which is why most people either get a storage unit or just take half of your garage and neatly pack up. Y'all are moving, right? Pack for success. Pack up. Pack up the whatever clothes, half of your wardrobe that like pack up all your summer stuff, because 80s are gone. Pack up half.
Are you sure? Have you been outside the last week? We're in the middle of November and we're still having 75-degree weather. Come on.
You got to wear a sweater when it's 80. Then one day, then you'll have to do it. But pack up and and I would definitely say a colleague of mine coined the phrase "pack for success," and I think that's the truth. Pack for success. You're gonna sell your home in our market. You're gonna sell your home. It's just a matter of, do you get asking or like 15,000 over asking? And really, what that boils down to is when they come in the home, do their heartstrings get, do they go pitter patter? And that's all showing condition for sure.
Yeah. So Crystal has a question that kind of goes along with what we're talking about, and I think her second question we've already kind of answered. It was about upgrades and what I should do in selling it. And actually, this may be a good question to send your way. She wanted to know, should I take out a home remodel loan first and then sell? Maybe they're in a situation where they know they have some upgrades and things they need to do to get the house. Maybe the carpet is not up to par and that really needs to be replaced. Maybe there's some substantial things that need to be done. I want to move, but I need to get these things done first. And I really, it's either, I don't have the money for that without dipping into my, maybe my down payment for the new place if I'm going, or what are some variables there? Is it a good idea to take out that kind of loan?
Well, I think first you should
Knowing
have a
you're going to say,
conversation. Yeah, I mean, I think you should have a conversation with your agent, like Blake mentioned, and say, go over what are the real needed items that need to be repaired. Carpet, yeah, probably. And then we can kind of assess. You definitely don't want to refinance. That's not the answer, because you're going to have closing
right,
costs that you're not going to recoup. So what you want to look at is a home equity line of credit, which Members Credit Union offers. You can do a home equity line. They're very inexpensive. It's a great way to tap into your equity, handle all of your different repairs. And then when you go to sell, you pay off your first mortgage and you pay off your equity line. And then what's remaining, you can actually utilize on the next home. So yeah, I think it's a great idea. If you don't have the cash to make those repairs, I think a home equity line is the way to go.
and we even have now, we have the new home improvement loan that doesn't even actually affect your equity. It's just a line of credit that's specifically for your home improvement. You have to provide us what you're wanting to do, the estimates from the people that are going to do it, and we can give you, and I think it's up to $10,000 or $15,000, and it doesn't have anything to do with your equity at all. So we do have that option as well now.
That's an awesome option, which I did not know about, but I love to know now. That's great.
Yeah, I'll send you some information on it.
Yeah, please.
That's awesome. I'll tell you all, there's a Wall Street Journal article that said that I used to use all the time. It was about 8 years ago, that said if the average person spent $5,000 on their home improvement, they would make 15. And I think that in our current market, that's very true. Now, whether you can appraise for that additional amount is a totally different conversation. But the reality is, most people, and that's come back to that initial question, what's the right improvement in our current market? And really, it does depend. If you're in a planned unit development, if you're in a neighborhood, a big neighborhood that has set construction costs and resale amounts, you're stuck, right? You're going to be confined to that neighborhood. So if you go out there and you put in some fire pit, some fireplace outside, and you're doing all these over improvements, it's going to be hard to appraise for that amount. And that's why it's impossible to help that person who asked that question. She's going to have a couple of realtors come out and advise her on what she should and shouldn't do and what those prices might bring.
So you mentioned appraisals and stuff, and I want to go back to where we were talking about earlier about houses. We're kind of getting into some bidding wars and things, and some of the prices are driving up further than the asking price. Have we seen the appraisals? Have they been hard to reach some of those numbers?
I think it's hit or miss. I mean, some of them are coming in and, without, a blink of an eye, and then some of them are coming in low. So, it really comes into play if you have a really good real estate agent. Blake's team, they're going to advise you and say, look, you can go over this, but they're going to prepare you and let you know, look, I think that it's probably going to come in at this value, so you're going to have to put down your down payment, plus you're probably going to have to pay another $5,000, whatever that's going to look like. So mentally, you're prepared for that appraisal to come in, and that way it's not just the shock. I think that's key. The people that have had a home that's slightly underappraised, they've been prepared. They were already ready for that. They had the money saved, and they're willing to pay a little bit more to go on and get the house that they want. So I think preparation and having that right advisor is just key in this market.
Yeah, expectations are the key to any market, frankly. But right now, I think expectations are challenging because the market's challenging. So I think that's why we're also seeing a 25% uptick in terminations, is that People feel they're maybe overpaying. In our market, I'll be honest with you, they're paying premiums, but they're not paying like Charlotte and Raleigh did when we had that 10% equity increase, like yearly 10%, quarterly 10% equity increases in major metropolitan areas. We're not really seeing that. We're seeing 3 to 4 to 5% equity increase, which is better than we've seen in the past, but it's not making people pay like these ungodly numbers really yet. And appraisers in our market are very conservative. So they're not gonna allow this crazy, a home that's in a planned unit development where everything is selling at 120 a foot, right? At 200,000 to 210, and they're not, all of a sudden the neighbor makes their home really pretty and people are willing to pay 240. I mean, unless they bring a ton of cash, they're not closing on that house at 240, right? So I think expectations from a setting up realtors with their sellers up front, like, hey, we might be able to get this number, but unless they're bringing cash, it's probably not closing at that number. And buyers, same thing. If you want to win, you're going to have to write healthy due diligence amounts, be prepared to financially commit to this home from the get-go almost, because you're writing $1,500, $2,500, $3,500 due diligences, where in the softer market, they were writing $500, $250, right? It's a different, so that's an initial commitment that buyers are making to this process. And that's really, I don't see that changing. So if buyers are lukewarm about buying, they're not going to win.
And realistically, in Raleigh and Charlotte, the due diligence amounts that they historically have always put down a little bit more. Like here, $500 to take your house off the market, that's really low. So now I am starting to see a lot more people that are putting up, a couple $1,000s just to, win the deal. So be prepared for that. That's an upfront expense.
Yeah, it gets credit back at closing, y'all. You only lose it if you terminate. And I think that's, and to say, why are we seeing more terminations? I think that when the home is inspected and the home's not perfect, they feel like they overpaid. They expect all these things, and sellers are over, and this is again expectation, sellers are overconfident, and they're like, well, I got 10, 15 over now, I'll just go back on the market and get another. And that's not advisable either. And that's also on the realtors to set those expectations of, look, your home they'll find some things, and be prepared to give a certain amount for repairs.
All right, well, that's all the questions that I have that was submitted to us. If there's anybody on the call that wants to ask a question, feel free to unmute yourself and ask that question, or you can use the chat box feature and I will read off that question. We have about 5 or 6 minutes left with Ashley and Blake to be able to do that. So does anybody have any additional questions that we maybe didn't? Yes.
I do. I have a question.
Daniela, is that how you pronounce your name?
Daniela. I want to know about the fixed rate versus adjustable rate.
Okay. So in this market, the 30-year fixed rate mortgages are so low that the adjustable rate mortgages aren't really, there's not enough spread there to really justify going for an adjustable rate mortgage. So 99.5% of my clients are all on a fixed rate, be it 30, 20, or 15. I just don't have anybody asking for an adjustable rate because of the fact that they're almost the exact same rate. So if you're a first-time home buyer, or it's a property that you're going to stay in for 5 years, I would recommend a fixed rate, just because plans change, things of that nature, things happen. I would go for the fixed rate all day long.
The reason why I ask that, because Members Credit Union only do fixed rate, and I think I'm with State Credit Union, but I think they do adjust rate. Sometimes decide which one to go with for a better deal. Oh, my alarm's going off.
State Employees Credit Union has a nice product. It is an adjustable rate mortgage, but look at those rates in comparison to the 30-year fixed rate. If you could save up a little money or utilize the down payment assistance program through the state, you're going to end up with a rate of 2.5, 2.75 fixed for years. You're not going to have to refinance, which is an expense. You're not going to have that crazy like stress of, oh goodness, my payment's going to change. So, you know, I really am a strong advocate for the 30-year fix.
And she mentions the down payment because ultimately most folks are using the ARMs for lack of down payment purposes. And that's, you know, I think that if you have 3.5 to 5% to put down, then almost everybody's going with a non-ARM, right? A non-adjustable, right? Because that's the way to, that's long term. Rates are going, we talk about how they're not going up in the immediate future, but of course they've got to go up for financial, you know, health. It just isn't healthy to stay this low. So in a few years they will be higher, and if you're on a 5 or 7 year ARM, you're going to really wish you didn't have that adjustable.
Yeah, great question. Thank you so much.
Thanks, Anela.
Somebody else
All right.
themselves, but I think they got back on the mute train. So I think did anybody else type anything else, John?
Nobody else typed anything else. Do you or actually have anything else that maybe we didn't cover that you had thoughts in preparing for tonight, today, that you wanted to share with everybody?
Ashley?
You know, I just want to say, you know, reach out. Blake and I work together and have for many, many years. John will share our contact information. I'm on the Members Credit Union's website. So if you can reach out to me first, I'll definitely get you in touch with Blake and his team. He has a fantastic team of many people. So there's always a good fit for you and your family. There's always someone available that can show you a property or talk to you, which is key in this market. And we can get you pre-approved in one day. It's an online application. The link's on Members' website. You select it, you complete the application. I'll call you that day. I have a team as well, so we are super responsive. Nights, weekends, whenever. Definitely reach out to us. Don't feel like, oh, good heavens, I want to go out and look this weekend. Well, I just don't have enough time. You do. Go on, call us now. You know, we will get you pre-approved before the weekend, and you guys can set up an appointment and go look at homes.
And she gave me a plug. I'm going to give her a plug and say she's literally like the best lender in the Southeast, like literally wins awards every year. And she's the bomb, and she's got a big old team. And whenever you need her, and this is, I'm working on this with her as a friend. I want her for it not to be this way, but currently it is. If you need her, you can have her. Just, she'll text at all times. I mean, it's ridiculous. And we're working on it from a friend to a friend. I need, you know, she needs to like let some of those team members maybe be on call a little bit. But she is very amazingly communicative, and yes, the products are going to be on. I mean, she's going to be able to match or do better than what you're probably going to find anywhere else.
Thank you, Blake.
Well, thank you guys for attending our webinar today. Thank you again to Blake Ginther of the Ginther Group with Keller Williams, and Ashley McKenzie Sharp with Fairway Mortgage, which is a connection partner with us here at Members Credit Union. And we're so glad that both of you could be with us today and to answer some of these questions. Thank you all for submitting your questions and having, I think it was a well-rounded group of questions that they had today, and took care of our hour here together. So thank you so much. This video will be posted on our YouTube page and posted to our social media page very soon. So you will have the opportunity, and I will include in that video the opportunities and the contact information for both Blake and for Ashley. So on behalf of Members Credit Union, we thank you all so very much for being here today, and we hope that you have a wonderful rest of your day and a great weekend. Thanks so much.
Thanks, John. Bye, guys.